Hello everyone, good evening. Wow, before time many people. पहले से आके good evening. The juice is high even before the class starts. Good. Really nice. Hitesh, Meghna, Nilabjo, Sudhanshu, Banreddy, Shruti, Mohammed. Nice people. So, did you guys read what we did in the previous session? Initial 5 to 10 minutes, you need to have some just chit chat with me, right? So that I get into the right gear. थोड़ी बहुत बातचीत से both the ends need to get charged up. Nilabjo, they are different. They are different. Management and those charged with governance are different, right? When we'll be doing the miscellaneous topics, I'll take that up. The difference between management and those charged with governance, okay? Just make me recall this fact that I have to tell you about this. I'll tell everyone. This is something, management and those charged with governance, which actually everyone considers it to be the same, but they are different, two different terms. And just remind me over there in the next session when we'll be covering miscellaneous topics, I'll take that up. What about others? Where are the usual people? Tiwari ji, Karthik, आज आए नहीं है क्या? Good evening, Priyanka. Whosoever is present, they have to mark their attendance. We'll be revising the previous session, but before that, I want to know if you guys have any doubts from the previous session. Okay. Good evening, Khushi, Hiral, Siddharth. Hanji. Any doubts from the previous session? Have you read from your module? I hope everyone got the notes. I've uploaded the notes for the past 4 sessions. Yes, Banreddy, you seem to be absent. You don't seem to be absent. You're not absent. Right. Good evening, Deepak. So I hope everybody has got the notes. You have downloaded the same, have gone through them, or your study material as well. Should I take up a recap of the previous session, or should we go ahead? Do you have any queries or anything? We can always take them up in the initial 5 to 10 minutes of the session. Otherwise, we'll proceed further. I would be requiring teams today, but it doesn't seem so that people have still logged in. People are still to log in. Nilabjo, this yes was for resuming with the next topic or taking a recap of the previous session? Recap would be good. Oh, Hitesh says no doubt. Wow. Priyanka, I find it difficult to study each and every page. Please guide me, sir. Each and every page. Priyanka, I will be taking up on how to manage and study the chapter in the next session. I will be uploading a chapter chart with the notes by the next session. Okay. And then I suppose that trick will help you out with this problem that you're finding it hard to study each and every page. You need not study each and every page. You just have to give it a read, understand the concepts, and automatically you'll be just, I would say, need to remember those facts which are exam oriented. Once you understand the concept, then is the second stage of learning. Third, preparing for exam. Okay, chali. So, I think reserves and surplus was good. I need to take it again. Borrowings part, we did. The existence, the completeness. I told you about the external confirmation procedures, right? And the interest rate, nature, and repayment terms, they were important. Then short-term and long-term borrowings, valuation. Again, I told you about the repayment schedule. Bandretti DSI's diploma in information systems audit. This is a diploma which you which is like organized by the Institute of Chartered Accountants of India, ICI, for its members. Members who can, they'll have to enroll with this course, and there are classes. You have to take those classes, and then you have to appear for an exam, 2 exams actually. Then you earn this diploma. This is for the auditing of information systems in any entity. As an auditor, you get impaneled for the auditing of information systems. So this is that diploma, and at international level, it is CISA, Certified Information System Auditor. Okay. So valuation, yes, we did repayment schedules. We need to get right, and foreign currency loans, AS11. The most important part was the debt agreements. Section 180, 185, 186. Section 180 was the restrictions on powers of the board of directors. 185 was loans to directors, their relatives. 186 was intercorporate investments by companies, like companies invest in each other's, like they can give loan to each other. So what are the restrictions on that? Whether they're allowed to do so or not. So 180, 185, 186, matter of company law. I'll give you the crux, what this section is all about. And the auditor has to verify that there is no contravention of these sections. Presentation and disclosure. You just need to understand how the loans and borrowings need to be disclosed, and further their classification. How in depth we have to give their classification and disclosures, right? I'll be showing you all the disclosures when we are done with this section in the next session, that how are they presented in a balance sheet. First, I told you we need to understand the concepts, understand what it is all about, what is the disclosures, and then we'll apply it practically as well. In the last session, we'll try to apply it practically in a balance sheet as well. Short-term borrowings, and then, yeah, this was important part, right? What was it? Okay. I would like to take it again. where the company has borrowings from banks or financial institutions on the basis of security of current assets, it shall disclose the following. What it shall disclose? Okay. Right. Okay. It is saying quarterly returns. Yes. Quarterly returns or statement of current assets filed by the company with banks or financial institutions. What actually is it? Let me tell you. Okay. This is the bank. Let it be AXW Bank, right? This is a borrower. This is a shop or showroom of the borrower, right? Bear with my drawing skills. Okay. The borrower approaches the bank. It asks them for a loan. It says, can you give me a working capital loan? What is a working capital loan? I need to make purchases. I don't have enough money. I'll make purchases. I'll sell it. I'll get money. I'll return it to you. So the bank will give me money. The bank will give me money, right? With that money, I'll make purchases. I'll sell it in the market. I'll earn money. Obviously, the money will have some margin. My profit I'll return the money to the bank out of these profits along with interest. This is how a loan works. The bank will earn interest and we will earn margin. Out of this margin, it contains our profit as well as we'll be able to give back the interest. This is how the cycle works, right? Now, bank says, we are giving you money. What in case you are not able to earn a decent margin? There could be a situation where you could get into losses, or you could go bankrupt, or you could shut down the business. What in that case? So the borrower says, give me a loan, and it asks for what is the security. Because if it is a term loan or anything else, you take the building. It is a gold loan, you take the gold or jewelry, right? If it is a vehicle loan, you hypothecate the vehicle. But what in case you are taking up a working capital loan? So the borrower says, the stock with me. The stock with me. This is the stock which the borrower has purchased from the money lent by the bank, and the purchases have been made from the vendors, creditors, right? It says the stock is my asset, sir. I'm telling the bank, and I have sold, so I have earned debtors. Right? You can have a charge on my stock or my debtors or both. Bank says, okay, fine. In case if any of these things happens, losses, breakdown, shutdown, your margin is, you are not able to give us back the interest, or you miss installment just because you don't have money. In that case, after giving you a reasonable time, we'll take up your stock and sell it in the open market. We will realize money from your debtors, and that will be our money. As far as the value of loan is concerned, whatever balance is left with the bank, they'll give it back to the borrower. Balance would be given to the borrower, whatever they are able to realize from the stock as well as from the debtors. Right? जो कुछ भी उन्हें मिलेगा स्टॉक बेचकर, उनकी उधार से, they'll keep the money with them as far as the loan is concerned, amount of loan, and the balance will be given back to the borrower. For this purpose, now the bank says, we can't be there on everyday basis at your godown or your shop. So you have to submit us stock statements. It could be monthly, it could be quarterly. You have to submit us stock statements, monthly or quarterly. These stock statements would tell us what is the quantity and value of stock at any time in your godown. Because at any time in your godown, whatever you owe to the bank, suppose at any time you owe 5,90,000 rupees to the bank out of the loan, there should be stock greater than this value at any time in your godown during the year. The average stock maintained by you on the basis of stock statement submitted to us should always be greater than this value. This is our security. To keep a check on the same, the bank asks them to deposit stock statements, properly signed and stamped. And as well as debtors. What is the balance of debtors list to the bank, if they have a claim over debtors as well. It could be either or both. So this is what the stock statements they are talking here about, where the company has borrowings from banks or financial institutions on the basis of security of assets, right? Quarterly returns or statements of current assets filed by the company with banks or financial institutions are in agreement with the books of accounts. So the auditor has to check what returns or statements did you file with the banks and the financial institutions from whom you have taken loans, and you work out the cycle and check whether they are in agreement with the books of accounts or not as on a particular date. This is a new amendment as per the Companies Act, and this is a new addition to the financial statement disclosures. And this is a responsibility has been cast on the auditor to check for the same, right? So the company will give these details and the auditor has to check. If not, summary of reconciliation and reasons for material discrepancies, if any, to be adequately resolved. If the stock statement submitted, you'll read about it, the cash credit limits, the overdraft, the bank loans in the chapter of bank audit. I'm just giving you a glimpse of that. So quarterly returns do not match with the books of accounts. The stock values or number doesn't match. Then you have to give a summary of reconciliation. Could be when the stock was being taken, physical report was being prepared, immediately the same day, the report was submitted to the bank during the day, and in the evening, we received a lot of goods in transit, which were in transit. So there was this difference. Reasons for material discrepancies, if any, to be adequately disclosed. Right? We did willful defaulter. Pooja, bank actually can physically verify if it wants. Hitesh, Weekly would be it would be a cumbersome work for both the bank and the borrower. Usually quarterly or monthly or fortnightly could be fine. Yes, Cyril Shriram. Shriram, as a company or a firm, you have to earn that much that you are able to bear the interest as well as the repayments. You'll do it in your finance. When you calculate ratios, you take up the installment amount as well as the interest amount, right? You should be able, otherwise the capital will get lost. You'll have to earn that much that you are able to pay the installment. Hitesh, discrepancies means anything which is not in agreement. Errors. Discrepancies with errors, not matching, not in agreement. We did registration of charges and satisfaction of charges, then utilization of borrowed funds and share premium. Okay, be with me in this. I'll explain it again. Okay, what does it say? Where a company has advanced money, where a company has advanced money, it is here, or loaned or invested funds, either borrowed funds or share premium. Just a second. Okay. Either borrowed fund or share premium, right? Or any other sources or kind of funds, whatever funds the company has. Okay. So this is the company. On the first occasion, company has funds. The major funds could be it has borrowed these funds, or it could be share premium. Okay. Or any other sources or kind of funds to any person or persons, entity or entities, including foreign entities. These are known as intermediaries. So it could be a person, entity, foreign entity. Right? So this is an intermediary. And it could be the agreement of giving this, could be in writing or by any other means, with the understanding, whether recorded in writing or otherwise, that this intermediary shall directly or indirectly, whatever could be the way, lend, further give loan, or invest in other persons or entities identified in any manner whatsoever by or on behalf of the company. So this intermediary further directly or indirectly invests in other company, gives loan, invest. This is the ultimate beneficiary. right? Or it could provide any guarantee, security, or like to on behalf of the ultimate beneficiary. So using those funds, it could be any guarantee or security on behalf of the ultimate beneficiary. 3 persons involved. Fine. The company shall disclose the following: whatever the date and amount of fund advanced or loaned or invested in intermediaries with the complete detail of each intermediary, date and amount of fund further advanced or loaned by such intermediary to other intermediaries or ultimate beneficiaries, along with complete details of the ultimate beneficiaries. If it is a case of a guarantee or security, date and amount of that, and declaration that provisions of FEMA, Money Laundering Act, Companies Act have been properly complied with. Yes, Shriram. In layman language, you can say that. Okay. So these are the details to be given in that case. Now the B part. B part here says where a company has received. Now, the company has received any fund. It's the other way around. In the previous case, company was giving. Now the company has received from any person or entity, including foreign entities known as a funding party, with the understanding, whether recorded in writing or otherwise, that the company, now our company, T&N Cookies Private Limited, shall directly or indirectly lend or invest in other persons or entities identified in any manner whatsoever by or on behalf of the funding party. Provide any guarantee, security, or the like on behalf. Now, in the next case, there is a funding party in the shoes of the company. As what is the role of company in this case? Now, in the second case, it is the funding party. It gives money to the company, invests, loan, guarantee, security, whatsoever be. Now, the company invests in some other company, directly or indirectly, known as the ultimate beneficiary, any person, entity identified by this funding party. In the previous case, this ultimate beneficiary was identified by the company. In our case now, this funding party is identifying this ultimate beneficiary to whom you have to invest. Now the company is acting as an intermediary in our case, second case. In this case as well, date and amount of fund received from funding parties, date and amount of fund further advanced to the ultimate beneficiary, date and amount of guarantee security provided to or on behalf of ultimate beneficiaries, and FEMA, Companies Act, PML have been complied with. I hope the difference between A and B is clear. There could be many reasons, Sudhanshu. There could be many reasons. So this has been brought to bring more transparency in reporting by the companies. There could be many reasons for this. Obviously, when there are reasons, that's why the government, the law comes out with this kind of disclosures. There could be many reasons. Any taxation benefits or any transfer of money, whatever it could be. You can get it from the reasons could be derived from these acts. Non-compliance of FEMA, Companies Act, money laundering, there could be many reasons. I hope I am clear. Please let me know. This was the gist of our previous class. I hope I am clear. Are we? Hiral, the ultimate beneficiary is the third person. In both the cases, ultimate beneficiary is a third person or entity. In first case, the company gives the funds to an intermediary who further invests in an ultimate beneficiary. In the second case, we are the intermediary, a funding party gives us the funds and we directly or indirectly invest in the ultimate beneficiary. Right? These are two different cases. I hope Hiral, I'm clear. Chaliye. Fine. So let's start with the today's session. In today's session, it is you who are going to give me the hints. Okay. Let's resume the today's session with an activity ongoing throughout the session. Okay. With an activity going on throughout the session. So what is it? You have done borrowings, right? We'll be doing loans and advances now. Then we'll be moving to fixed assets. Please understand that the borrowings are the liabilities. Loans and advances given to other parties are the assets, right? Similarly, fixed assets, PPE, property, plant and equipment are the non-current assets. And intangible assets are also fall into the category of also are like fixed assets. The procedures for both of them would be the same. So we have done, no, Hiral, the ultimate beneficiary is not the funding party. Ultimate beneficiary is a third person or entity. We have three entities or persons entering into this transaction. Ultimate beneficiary in both the cases is a third person or entity. Whether the first case or the second case. Just the company and the funding party. In the first case, there is company and intermediary. And in the second case, the company becomes the intermediary and the funding party takes place of the company. Chaliye. So we have loans and advances. What are loans and advances? The borrowings of others which they owe to the company. We'll come to that, Sriram. We'll come to that. Loans and advances, loans and advances to related parties, security deposits, capital advances, amounts recoverable in cash or in kind for value to be received. Against value, you could receive something in kind. Quite a general definitions. Other current assets could include balances with statutory government authorities like your GST, ITC balance, your TDS balance with the government authorities, advance checks deposited by the company. These are statutory balance with the government for which either we are going to claim a set-off or a refund. So the majorly these are other current assets, and while finishing with current assets, we'll take it up again. Here we are going to do loans and advances. Whatever borrowings, the role borrowings play on the part of the liability side of the balance sheet, loans and advances play on the asset side. Borrowings are what we owe to the others, and loans and advances are what others owe to us. Borrowings हमारा उधार, loans and advances दूसरों का उधार हमारे लिए. ठीक है? So, assertion 1, existence. To establish that such loans and advances exist as at period end, what could we do? Direct confirmation procedures. We could directly ask for a copy of accounts from the persons to whom the company has given the loan or the entities. What is your balance with us? So we could ask for a balance confirmation from them. Your balance in our book stand at 5 lakh rupees. In the name of XYZ Limited, in our statements, in the company statement, you owe 5 lakh rupees to the company Tea and Cookies Private Limited. Does Tea and Cookies Private Limited stand at 5 lakh rupees in your loans, in your borrowings? So, along with the balances, we can also check for the principal amount. whether there is any interest accrued, payable, and other agreed terms between the parties. Quite normal. Something which is related to loans, completeness. Cutoff, that means they have been recognized in the financial statements. Existence is added on the balance sheet date. They have been recognized properly in the financial statements. Completely, nothing is left. Obtain a list of all advances and other current assets and compare them with the balances in the ledger. You have to verify loan agreements, acknowledgement of parties with respect to outstanding loans. Yes, we acknowledge that we owe you this much money. And a company can grant loan or advance only if it's authorized by its MOA or AOA. So I told you about section 189, section 180, 185, 186. There are restrictions. No restrictions on proprietorship firms, partnership firms, but yes, on companies, there are restrictions as per the company law, and the auditor have to take care of those restrictions, whether the company has complied with the same or not. In the case, the auditor should confirm that the loans advanced were with the competence of persons who had advanced the same, directors in the case of a company, partners in the case of a firm, and trustees in the case of a trust. These are the persons who are competent in the case of their organizations to take decisions for advancing the loans. You have to inspect the minutes of the meeting of the board to confirm if all material loans and advances were approved by the board of directors. No loan has been advanced to any person or entity without the approval of the board of directors. Right? This would result to a higher misstatement because approval is required in the case of a company for carrying out such activity. Verify that the loan has been acknowledged by the party, and in addition, inspect if any security has been deposited against due repayment of the loan. Ascertain if they are being recovered regularly as per agreed installment. So whatever loan has been, it could be an employee loan as well, acknowledged. It could be another loan as well, as within the, we are talking here about basic financial statements. In the case of a company, Companies Act restrictions do apply, and we have to take care of those restrictions. If the borrower, we are the lender now, if they have kept any security, the auditor could inspect that security. And he could also check whether EMIs or the installments are being properly received or not. If there are any related party loans and advances, review whether they were properly authorized and the value of such transactions were reasonable and at arm's length. In case we are giving loan to a third person, we are charging 12% rate of interest. But if you are giving to a related party, we are charging 6% rate of interest. Why is it so? This is not at arm's length. In the market, you are charging 12%. So what is the contention of the law over here? Law says if you have surplus funds and if you are permitted to advance loans, if you can get 12% rate of interest income, why are you lending at 6%? Forget these persons, forget these related parties. If you want to lend, obviously lend to those persons who are willing to take it at 12%. The company would have higher income, good results, good indirect income. Even from a taxation point of view, your profits would increase. Or your income, not profit, your income would increase. So the auditor has to check whether the advancing of loans and the terms are at arm's length or not. In relation to balance with statutory authorities like GST, input credit, ITC, input tax credit of GST, Prepare a reasonability with respect to purchases, expenses by applying the applicable rate to purchases, expenses. And in the case of any variance with the asset recorded by the entity, reasons for variance should be requested from the entity. For example, only 5% rate is applicable to the entity as far as purchases and sales are concerned. So we'll see the rate of GST on purchases 5%, rate of GST on sales 5%. I'll calculate the output and input liabilities during the year. I'll get the balance and I'll see what other inputs from the profit or loss expenses have been taken by the company. A rough balance or a draft balance I would be getting. If the balance recorded by the company is somewhere near to that balance, it's okay. Things are fine. But if there is a variation, huge variation, we need to ask the company, give us your working, give us the reasons why is there a huge variation. Minor variations are fine. That could be human or calculation errors, but not major. Further, the auditor should obtain statutory returns filed with the authorities like GST returns and verify whether the amount recorded as per the books of account tallies with the claim made with the authorities. For your knowledge, on the GST portal, you have a credit and cash ledger. Whatever balance lies in that credit ledger is what your ITC, input tax credit, available against the purchases and expenses you have claimed. And cash ledger is if you have deposited anything in cash, it reflects on the portal. Unutilized. So you can get the balance with the GST authorities, whether it matches with the books of account or not. This is what we have to check. Yes, Cyril, good. Yes, Shriram, this is the same GST ITC what you wrote. This is what I told you. And no. Sonika, this is not loans and advances. This is actually with the current assets, other current assets, like the statutory authorities. I'll be taking that up again with current assets also. This is what we are relating to our balances with the government authorities. The taxes, the input taxes available, that is other current assets. Advances with the government, like prepaid expenses type. Shriram, there are certain matters where the shareholders have given, the board of directors have the authority to take decisions. You will get to read about it in your CA final when you'll be covering the chapter of directors in the Companies Act. There are certain objects of the company where the board of directors are given the authority by the shareholders, the owners, to take day-to-day decisions. There is no relation between loans and with the GST returns, Sonika, but with the advances. The advances or the which are due with the government authorities, like the GST balances. If you have read GST, you will understand this. Valuation. Loans and advances. Do I need to tell you about the GST balances? Anyone, please? Have you read GST? You understand what is ITC, input tax credit? Have you read it, or should I take up an example? Please let me know. Do you understand what I'm talking about, the input tax credit? I've received a response from Shriram. As far as I know, he's well versed with this fact. What is ITC? But for others, you know what is ITC? Okay, fine. Valuation. Loans and advances and current assets have been valued properly, appropriately. Assess the allowance for doubtful debts. The company's estimate. At what rate is the company estimating the doubtful debts? Making provisions. Review the process followed by the company to derive an allowance for doubtful accounts. This will include the consistency comparison with the method used in the last year. What was your rate during the last year for provision for doubtful debts? 5%, 2.5%, 10%. Is it the same this year, or you are increasing it? If you are increasing the provision or allowance, why are you increasing it? Why is your recovery so uncertain? And whether the method is okay with respect to the business environment or not. With respect to the underlying business environment means the industry in which the company is working. For example, in our case, Tea and Cookies Private Limited, the industry of confectionery, tea, cookies, and all. If it is a cloth merchant, it could be the industry relating to textiles market. So, what is a trend in that industry? Obtain the aging report of loans and advances. Aging report is how old and new are your loans and advances. You have to split them between not currently due, 30 days old, 30 to 60 days old, 60 to 180, 180 to 60 in the basis of days, and more than 365, more than 1 year old. These are the categories of loans and advances you can get from their software, the aging report. Also obtain the list of loans and advances under litigation. If there are legal disputes, court cases with respect to the money, we have filed a suit against our borrower. As a lender, we have filed a suit to recover money from them. So we should put, the auditor has to obtain a list of the same as well and compare with the previous year whether any recovery has been made or the balance is lying the same, or the company has not given such kind of loan to any other such persons in the industry. Scrutinize and analysis and identify those loan and advances that appear doubtful. Discuss with the management about the reasons as to why these loans and advances are not included in the provision for doubtful balances. If we get an aging report, we get a running statement of the accounts of loans and advances, we'll definitely come across some accounts where the recovery is quite slow or there has been no recovery. We have to ask the management, aapne isko doubtful debts mein kyun nahi dala? Why is it still lying in good debts in the balance? It can be tracked as a bad debt or provision, a higher provision could be made against this particular debtor or particular borrower. Assess bad loans, advances, write-off which have been written off from the books means it is a loss for us. We have charged it to the profit and loss account. Irrecoverable advances. No certainty of recovering them in future. We have to check for a schedule of movements on bad loans advances, provision for accounts on loans and advances written off. What was the provision made against them? Because we'll be adjusting the final amount against the provisions only. You all know provision for doubtful debts, final accounts entries, provision for depreciation, we would adjust them against the final losses. I hope you all know about those accounting entries. We have to just check it. What was the provision made during all these years and now what is being written off? How to settle them in the form of book entries against each other. Check that write-offs or other reductions in the recoverable balances have been approved and authorized by the appropriate senior authority. Check that restatement of foreign currency loans and advances are in accordance with AS 11. The same point. Income tax refund. Income tax refund is basically TDS or income tax, advance income tax paid in excess by you. That is also current asset. But ready. Okay. Presentation and disclosure. Again, the same story. Schedule 3, Part 1, Companies Act. Long-term loans and advances. What are the capital advances? Capital advances means given for a long term of time. Capital expenditure, like for given for a longer time. Loans and advances to related party, we have to give minute details. Others loan and advances. These loans and advances shall be classified into secured considered good, means high chances of recoverability. Unsecured considered good, high chances of recoverability, but in secured, we have some asset of the borrower with us. We have some security available with us, collateral or whatever you call it. In unsecured, unsecured means in itself that we don't have any security, but the chances of recoverability are high. Doubtful, their recoverability is doubtful. So the company's management should be able to classify their loans accordingly. There could be a case where all the loans and advances are secured or all are unsecured. Some of them are doubtful, there is no doubtful loan and advance. It could be anything, but you have to classify it accordingly. Shriram, that is in the case of a proprietor, right? But a proprietor, because they have the same PAN. But in the case of a company, the thing is different. The book adjustments are different. Okay. Once you get to prepare the balance sheet and carry out the audit of a company during your articleship training, you will definitely understand what is the difference between preparing the financial statements of a proprietor, a partnership firm, and that of a company. Whatever we are reading in audit, the basic ground for us is the companies, right? But simultaneously, we are discussing about proprietors and partnership firms as well. So whatever you have written about the proprietor Shriram, it is good. It holds good, but not in the case of company. So what is the other disclosure? Allowance for bad and doubtful loans and advances shall be disclosed under the relevant head of allowances. Loans and advances, this relevant head. Loans and advances due by directors or other officers of the company or any of them, either severally or jointly with any other persons. Amounts due by firms or private companies respectively, in which any director is a partner or a director or a member, should be separately stated. Now, what does this mean? If loans and advances have been given to directors or any other officer of the company, either severally or jointly, could anybody tell me the meaning of this, severally or jointly? What does this mean? Come on. Severally or jointly. What does this mean? Yes, Siddharth, you're right. Siddharth, this is because in the case of proprietorship, in the case of partnership, it is our money which is at stake. Will be highly cautious. The management and the ownership is the same. But in the case of companies, shareholders' money is involved. The owners and the management are different. So that is why so much restrictions and sensitivity with respect to companies. It is others' money which is being invested in the company and someone else is managing the money. Good, Akashnil. Good, Shriram. Good, good, good. Yes. Either severally means separately, individually, or jointly with one or more persons have taken a loan. Amounts due by firms or private companies, respectively, in which any director is a partner or a director. There could be other firms, proprietorship firms or partnership firms, or could be other companies where the directors of Tea and Cookies Private Limited have interest. They could be a proprietor in that firm, they could be a partner in that firm, or they could be a director in that other company which has taken loan from the company under audit. So those are known as associate concerns or sister concerns. Right? In layman language, those are known as associate or sister concerns, and you have to take care. Somewhere like they fall under related party as well. So if loans and advances have been given to them and balance is still outstanding, we have to categorize here accordingly. Then short-term loans and advances to related parties, others, classified as secured, unsecured, doubtful, allowance for bad and doubtful loans, loan and advances by directors, by firms, the same case. The same thing. Now, this is important. Following disclosures shall be made where loans or advances in the nature of loans are granted to promoters, directors, KMPs, and other related parties as per the Companies Act. So, definition of promoters, directors, KMPs, and related parties as per the Companies Act, either severally or jointly with any other person. Repayable on demand without specifying any terms or period of repayment. Either repayable on demand, they have a definite term, right? If there is no such term or period of repayment, they are repayable on demand, means whenever asked by the company, the loan be repaid. So you have to give this, the company has to come out with this table, the type of borrower, whether it is a promoter, director, KMP, or related party, amount of loan or advance in the nature of loan outstanding as on the balance sheet date, percentage to the total loans and advances. So out of the total loans and advances, what is the percentage given to promoters, directors, KMPs, related parties separately? This table, this is what you have to give. And the auditor has to verify it. What are KMPs? Who are KMPs? Subsidiaries related only, Sriram. Who are KMPs? Yes, key managerial persons. Good. Key management personnel. Good. KMPs. Okay. Loans and advances. Any doubt in loans and advances? What we have read, if borrowings are cleared, loans and advances would be cleared. If PP is cleared, intangible assets are cleared. If creditors are clear, debtors are automatically clear. Yes. कितनी इंटेलिजेंट हो तुम लोग. Good. Okay. One who aspires to be at a position should always know about those positions. Future KMPs, right? Okay. चलिए आगे. चलिए. Do you have a pen, paper with you in hand? A diary, a copy? If you don't have, get them. Get it. Come on. No, but Reddit is not the case. If assets are clear, liabilities are also clear. No. कितने शैतान हो तुम लोग. बन रेडी और सिद्धार्थ बिल्कुल 10 seconds के difference पे you have given me the same statement. Huh? Assets are clear, liabilities are also clear. Okay. मस्ती की मूड में सब. चलो. Fine. So we have reached the topic of property, plant, and equipment. They fall under the category of non-current assets. In this topic, we'll be having fixed assets and intangible assets, right? Okay. Aditi, this is your first comment which I have received query. This is your first. That is why I've been asking for you and Karthik. This is your first query which has reached me. There is some lag with the network. Okay, there is this student by the name of Rahul. In the last session, what happened? He has been asking me doubts. He has been replying to my questions. But after the session was over, then all comments by Rahul all at once. I don't know what happened at that time. All the comments during the 2.5 hour session, they just got flashed at once. I think it happens with many of you people that your queries do not reach me in time. Prabhas, your queries are reaching me. Aditi, there might be a lag with your network. There is no issue, Aditi. You can always ask me anytime, or if there are any questions, just jot them down. Today might be there is a problem with your network. In the next session, when we'll be doing the miscellaneous part, the queries part, and the test, you can always ask me those questions which could not be addressed during the previous sessions. Okay, Aditi, don't be worried for that. I know you sent so many queries. Just jot them down with you, and in the next session, you can always come up with those queries. Okay, now, so this is going to be team competition. Okay, 2 teams, and they are going to give me the points. Till now, you are all well versed with the knowledge of assertions, and now we can apply them on fixed asset. Fixed asset is something which is quite normal. What would you check? How would you check as an auditor? Right? Then we'll see which team gets the maximum marks. And you'll have to give me some points related to various assertions. Okay? Chaliye. Okay. So let's get it. Team A and team B. Fine. Let's get who scores good marks for giving me the points. It's fine. I can understand the lag. That is completely fine. Yeah. Nilabjo, Shriram, Aditi, your network is fine now. तुम लोग की सब क्वेरीज, तुम लोग की सब मस्ती स्टेटमेंट सब पहुंचती है मेरे पास. And Shriram's worries too. Shriram, stop worrying that much. Okay? सार्थक अभी स्टार्ट ही हो गया. अभी लेट्स वेट. Okay. चलो, who all are present over here, just reply with a hi. Okay, or a present or a P, whatever you like, so that I can divide you into teams. Come on, 2 minutes. I'm going to divide you into teams. So you have to reply with a hi or a present or P, so that I could know who all are present over here, who could reply in time, so that we can finish off with this topic. Okay. So team A, Siddharth, Prabhas, Bindu, Aditi, Sudhanshu, Khushia, Sonika, Meghna, Pooja, Hiral. Okay. Team B, Shriram, Banreddy, Akashnil, Khushi, Aradhana, Sarthak, Prabhas, Nilabjo, Shaktivelan, and Aitha. Okay? 10 members in each team. I hope everybody is clear with their team, which team they belong to. Now you have a pen and a paper, right? So I'll give you, this is a 1-minute activity. Okay? I'll give you assertions with respect to fixed assets. Fine? Hitesh, you are not there. Okay, Hitesh. Hitesh, team A. Done. So I'll give you 1 minute, right? And I'll give you an assertion. You have to write that assertion and write the points which come to your mind with respect to fixed assets. Which come to your mind with respect to fixed assets, right? Okay, Prabhas, you are in team B. Prabhas, you are in team B. Whatever comes to your mind, just jot it down. Not in complete sentence, in short form, in running language, whatever you like. Fine. And then while we discuss with the assertions, you have to see how many points did you get correct. And every one of you will get a mark for the same for your team. You'll fetch marks for your team, right? I'm relying upon you. I'm trusting you for the honesty. Okay. We all have read, we all have learned honesty is the best policy. Okay. So be honest with me in that case. Okay. Chaliye. Fine. Neha, please take any team, team A, team B, whatever you like. You want to be in team A or team B. So the 5-minute game starts now. The first assertion for you with respect to fixed assets is valuation. Valuation. And your time starts now. Have the stopwatch with me. 1 minute. And yes, बन ready. You are trustworthy. नहीं रिद्धि प्रभास को मैंने टीम बी में शिफ्ट कर दिया. 1 minute. Whatever comes to your mind with respect to fixed assets valuation part. Whatever comes to your mind. You just have to write it on paper, Abhi. Don't send it to me. Just write it on paper. In short form, whatever comes to your mind. With respect to assertion valuation about fixed assets. No, don't send it to me, guys. Don't send it to me. Keep it with you. Keep it with you. Keep it locked with you. Unlock it when I'll ask. Not now. Gehani and Neha. Gehani, you get in team B. Neha, you get in team A. Arey, don't send it to me. What are you guys doing? Next. 1 minute is over. Next assertion. Existence. Existence of PPE and your 1 minute starts now. Existence of PPE. Write as many points as you can, whatever comes to your mind. This is a self-analysis activity where you'll get to know what have you understood by now. If you are lacking somewhere, if you need more conceptual clarity, this is for you people. If you remain honest, this will be good for you. Existence with respect to PPE. One minute came. Okay, we are done. We are done with existence. 1 minute is over. The third assertion on which you have to think upon are rights and obligations. Rights and obligations with respect to fixed assets and your time. Your video is also lagging. Just let me know. Okay, time over. The next assertion with respect to PPE. Completeness. Completeness. Next assertion with respect to PPE. Completeness. One minute for the same. Make sure you don't write full points, just a crux or a gist, what could be there. Pooja, write on your paper. Completeness assertion, 1 minute. Done. The last assertion. The last assertion, disclosure. Disclosure. 1 minute you have. Disclosure. Just write it whatever comes to your mind. Okay, time over. Time over. No one writes now. Stop it. Stop it right away. No one writes now. Time is over. Be honest. Chaliye, let us start. Okay, let us start with your evaluations. So, the first part, existence. Now, you all can write whatever you written in existence. Come on. Whatever you have written in existence, in short form, write in short. I'm not going to read big lines. Write in short whatever all of you have written in existence. Come on, give me the points. Vinuji, are you there? क्वेरी लिंक में कुछ प्रॉब्लम है क्या? क्लास चल रही है प्रॉपर? वीडियो आ रही है प्रॉपर? क्वेरी लिंक में कुछ प्रॉब्लम आ रहा है? हाँ प्लीज. ठीक है, लेट मी चेक. हाँ, मैं आई ट्राई इट. विनोद जी ब्रेक कर दीजिए 10 मिनट्स का. आप ब्रेक कर दीजिए बिकॉज क्वेरी लिंक वर्क नहीं कर रहा है. चेक इट आउट, क्या प्रॉब्लम आ रहा है. हाँ, 10 मिनट का ब्रेक कर दीजिए. Okay. Hello, everyone. Back after the break. There was some technical problem with the query session, so I've opened it on a different gadget or my mobile. So please bear with me if I'm able to reply a bit late. So almost everyone has answered regarding the existence, right? Sudhanshu, Prabhas, you know your team. Which team were you a part of, right? Okay, please reply me with a hi if you are there. Yeah. So you people have to help me out over here. I'll not be able to give you marks. So you'll have to mark for yourself, right? So we are going with the fixed assets part and you'll have to mark yourself. Okay. How many points you got right and how many you got wrong. And just give yourself 1 mark for the right part in all the assertions. Okay. You have to help me out, right? I'll not be able to mark you because I'm on mobile now, not on the web with the query session. So let's see. Okay. To establish the existence of PP as a parent, just be with me and see whatever you could get while writing on paper, right? हाँ बैक विद एनर्जी खुशी मेरी एनर्जी उड़ गई थी एक बार ये क्या हो गया क्वेरी लिंक क्यों नहीं चल रहा ओके आई एम आल्सो बैक विद एनर्जी चलिए I'm back with happiness. At least the query link worked for me on the mobile. It's not working on the web. So review the entity's plan for performing physical verification. So of PPE, whether performed by own staff or by a third party, and the policy regarding periodicity means physical verification is done on annual basis or half yearly or every 2 years, 3 years. So whosoever wrote physical verification part, you can give yourself 1 mark. Whosoever wrote physical verification part, right? The auditor can himself also verify physically. Evidence of appropriate supervision of those performing physical verification. So what does it say? It says if somebody carried out physical verification, whether own staff or a third party, there should be evidence of physical verification, either a report or a form or like documentation which could substantiate the fact that the physical verification was actually carried out. Obtain PP physical verification report. So if somebody has written physical verification report backed by working sheets, they can give you themselves 1 more mark. Report, documentation of physical verification. If somebody has written that point, documentation with respect to physical verification, you can give yourself 1 mark, another 1 mark, right? And from these physical verification reports of working sheets, what can the auditor do? Assess if all the items of PP are properly tagged and carry identification marks. So the report should be able to tell us this, that PPE are properly tagged, they carry identification marks. Physical verification work papers do capture the asset identification numbers. Asset identification numbers vary for company to company. This is the company's policy. They vary from company to company, right? Reconciliation of the items of PPE as physically verified with the fixed asset register. So if anyone has written the point of fixed assets register, very important. Various registers to be maintained by the company. It is one of the registers and a very important register, the fixed asset register. If someone has written about fixed asset register, award yourselves 1 mark. Maintained by the entity as at the date, period of undertaking physical verification. Specifically verify the PP additions up to the date of physical verification have been updated in the fixed asset register. So additions and any deduction, sale, disposal have been properly made a part of the fixed asset register. So plus minus. Verify the discrepancies noted based on physical verification and the manner in which such discrepancies have been dealt with by the entity in its books and financial statements. For example, if there was any identified shortages, assets were not in working condition or active use, should be accounted for as deletions in the books of account post approval by the entities. Any old asset which is not in a working condition, or there was a shortage of any asset, right? There could be a scooter of a considerate value standing in the books of account, but physically it was not there. By the entity's management, depreciation should have ceased to be charged after the date of deletion. This is just an example that if there is something missing or anything which has been disposed of not in working condition, it should be regarded as a deletion, subtracted from the value, and no depreciation be charged on it after the deletion. Please keep on replying in the query session so I may be assured that the query session is working properly on my mobile, right? Oh, fine. Thank you, Siddharth. Okay. So completeness. Additions to PPE during the period under audit have been recorded in the financial statements and do not include any PP that belong to third parties, might have been taken on rent or lease or whatsoever be the case, right? If it belongs to the third parties, it should not be a part of our PP, the company's PP, but does not include PPE owned and controlled by the entity, although lying with a third party. So additions would always include a PPE, which is there with the company, but do not include any PPE that belongs to third parties. Now, if the ownership rights and controlling rights are with us, although the PP is with third party, that would be included. But if the ownership and control is with a third party, we cannot include it in our PP. Verify the movement in the PPE schedule, asset-wise compiled by the management. So what are the opening balances? What were the additions during the period? What were the deletions? What are the closing balances? Tally the closing balances to the entity's books of account. Check the arithmetical accuracy of the movement in PPE schedule. So if you have written movement in PPE schedule, additions, deletions, opening and closing, the reconciliation, so you can award yourself 1 mark. Tally the opening balances to the previous year audited financial statements. For additions during the period under audit, obtain a listing of all additions from the management and check if the additions meet the criteria of PPE as per AS10 revised. The most important part is the revenue and capital, whether they qualify to be a capital expenditure as per AS10 and could be an addition to the fixed asset. These costs include costs incurred initially to acquire or construct an item of property, plant and equipment, and costs incurred subsequently to add to, replace, or part or service it. So, bringing the PPE to a usable condition, all costs which have been incurred to bring the PPE yes, Nilabju, it will carry mark, right? So whatever expenses you have incurred for bringing the PP to a usable condition,
They all will form a part of the cost. AS10, if you have mentioned, given reference to AN10, wholeheartedly give yourself 1 mark. Mention of AS10 in itself is a very good point. Then verify and ensure that items such as spare parts, standby equipment, and servicing equipment are recognized as PP only when they are held for more than 1 period as per the requirements of AS10, right? If they get consumed in 1 period, they are of revenue nature. But if they can be used for more than 1 period, the same spare parts, standby equipments, or servicing equipments, then they are a part of PPE. It could be tools and spares and servicing equipments, whatever the head it could be. So if you have mentioned about spare parts, standby equipment, and servicing equipment, how can they be a part of PPE? Award yourselves 1 mark for that. Yes, Sriram, justified. Whatever Sriram you are trying to say has been given in various points. Ensure that the entity is not recognizing cost of day-to-day servicing in carrying out of an item of property, because that is revenue in nature. Test the purchase invoice, installation certificate, or report or other similar documentation maintained by the entity to verify the date of addition for all addition samples of PP during the period of audit. 1 mark. If you have mentioned about the completion certificate, installation certificate, purchase invoice, that we will tally with these invoices, 1 mark for completeness. That the entity has a purchase invoice against the acquisition of PPE, or if got constructed, installed at their premises, they have an installation certificate. 1 mark for this. Verify whether the PPE additions have been approved by authorized personnel. Verify whether proper internal processes and procedures like inviting competitive quotations, floating tenders were followed prior to finalizing the vendor for procuring items of PPE or awarding of work contract for capital projects. So if you want to get constructed a building at your premises, this is a works contract, a capital project, or if you want to purchase a machinery or a vehicle for the company, whether you float tenders or quotations were invited from various bidders, various vendors. So this is something which is an internal process. Documentation. In relation to deletions to PPE, now this is an important point, completeness. When we are talking about completeness, addition, deletion, very important. Understand from the management the reason and rationale for the deletion, whether a new asset was purchased and the old asset was sold, the old asset was disposed of, discarded, obtain the management's approval and discard note with respect to the disposal of the old asset. What was the process followed? For example, competitive quotes were asked for, tenders and basis for calculation of sales proceeds. So you came up with what? Who wants to buy that asset, purchase that asset from you? You want to discard it. You want to dispose it off, sell as scrap or whatever. So did you invite quotes? Did you float tenders for getting the various sale amounts? Who is which person? Who is going to purchase at what amount from you? Verify that the management accurately recorded the deletion of PPE. So deletion means original cost as well as accumulated depreciation up to the date of disposal. You know, this is an accounting concept you take care of while making cash flow statements, funds flow statement. You come across this fact that once an asset is sold, the accumulated depreciation account up to that date is also adjusted. And resultant gain or loss on disposal of PPE has been made a part of the entity's books of account. So additions, deletions, purchase invoice, everything. Additions, deletions, purchase invoice, Sale receipts. Give yourself 2 marks for this. Oh, wow. Penal discard note is something which is approved and signed by the appropriate authority that yes, this machine is not works for us, it is not in a usable condition, and it can be discarded. Discarded. So that is a discard note prepared. It is a part of documentation of disposing of the PPE part. Now we are done with assertion 1, assertion 2, existence and completion. We are at valuation, right? So valuation, which was the first assertion I gave you as a part of the activity, valued appropriately and as per the accounting principles. So we all know value depreciates due to a flux of time with use of the asset and obsolescence, right? Obsolescence means becoming obsolete, not worth using. The diminution, what is diminution? Decrease in value. Represents an item of cost to the entity for earning revenue during a given period. Unless this cost is in the form of depreciation charged to the accounts, the profit or loss would not be correctly uncertain. Basically, it is telling that that diminution in the form of depreciation right? So the depreciation is what? It is a diminution in the value, the part of diminution in value, which we charge every year to the statement of profit and loss, so as it gives us a true and fair view. What does the auditor need to check? Verify that the entity has charged depreciation on all items of PPE. Unless any item of PPE is non-depreciable, like land, give yourselves 1 part for depreciation. If you have written valued properly as per the accounting principles, AS10, give yourselves 1 mark. Depreciation, 2nd mark. Assess that a depreciation method used reflects the pattern in which the asset's future economic benefits are expected to be consumed by the entity. It could be straight line, it could be written down or diminishing value method, unit of production method as applicable to the entity. So method of depreciation, 2nd point. Award yourselves 1 mark if you have written about method of depreciation. If you have written about depreciation, 1 mark. Method of depreciation, separate mark. The auditor should also verify whether the management has done an impairment assessment to determine whether an item of property, plant, and equipment is impaired as per requirements of AS28. AS28, impairment of assets. 1 mark. Impairment of assets, very important. I hope you would have done this AS, impairment of assets. Impairment of assets, right? Have you done this AS, impairment? Yes, Siddharth, it is a valid point. If you want to take, so that actually valuation is required. See, you have purchase invoice if you have required, or you'll have completion or installation certificate with respect to value. So you require valuation when the company wants to value it at current cost. If the company doesn't want to value the PP at historical cost, it wants to value at current cost, only then you will require a valuation certificate. So you have to mention this fact accordingly if allowed by AS10, otherwise historical cost only. Yes, Shriram, it's okay. Okay, impairment means basically, so I'll not get into the depths of impairment. Impairment basically is when an asset is not, asset has become weak for the use, right? Impairment is basically when the asset is not delivering what is intended of it. You know, when the mixer grinder in your home, kitchen, starts making a lot of noise, then you come to know, you will say, bigad gaya hai. We need to get it changed, right? Or your vehicle start emitting lot of pollutant gases or starts making a lot of noise. We say purana ho gaya, bigad gaya, need to change. So the companies, what do they do? As per AS 28, they make provisions for the impairment of assets in their books. Whether they need to dispose of or they can run the asset for further, or it is related to various other fixed assets as well. For time being, if it is not in your syllabus, currently you just need to know about it that this is impairment. So you can mention of this fact and this will get you 1 mark. Definitely. Okay. Yes, Siddharth. If you wrote it with respect to valuation, you can get revaluation 1 mark. Rights and obligations. The entity has valid legal ownership rights over the PPE, claimed to be held by the entity and recorded in the financial statements. So whatever procedures were there for completeness, to test the additions, we have to verify the purchase invoices with respect to the legal title of ownership to the respective entity. For all additions to land and building, the auditor should check the conveyance deed, sale deed to verify whether the entity is a legal and valid owner or not. So if you have purchased it from a third party and not a vendor, so there would be a sale deed or an agreement. So rights and obligations may, apart from purchase invoice or installation certificate, if you have written conveyance or sale deed, if you have purchased it from a third party, you have purchased a second-hand PPE, or you have purchased it from a third party, not directly a vendor, will be having a sale deed, like purchasing a building. Okay, though no invoices in that case, or installation certificate or construction certificate, it is always a sale deed. So you can award yourself 1 mark. The auditor should insist and verify the original title deed, registered deeds for immovable properties held as at the balance sheet date. This point is very important from this year. Original title deeds. In case the entity has given such immovable property as security for any borrowings and the original title deeds are not available with the entity, the auditor should request the entity's manager for obtaining a confirmation from the respective lenders. It could be a bank, a company, that they are holding the original title deeds of the immovable property. Okay, give yourselves 1 mark for this. If the original title deeds are not available with the company itself, but with the lenders from whom the company has taken the loan, right? In that case, the auditor would request the management to arrange for a confirmation certificate from them that they hold the original title deeds. The lenders. Give yourselves 1 mark for this. Completely specific and different point. In addition, the auditor should also verify the register of charges available with the entity to assess that any charge has been created against the PPE. Very good. 1 mark for this. That rights and obligations. We have rights over our assets, but we also have obligations towards our lenders with respect to the PPE, because we have offered them as collateral security, and that obligation can be verified from the register of charges maintained with the company. Which assets have been offered as a charge, which assets have been charged up against the liabilities, where charge has been created against that PPE, because you have rights over that PPE, but they have also been offered as security to lenders. That can be verified from the charge forms. If you have written about charge, register of charges and charge forms, give yourself 1 mark. Hiral, yes, impairment loss on intangible asset, one and the same thing. Impairment loss on intangible asset, yes, this is a part over here. In intangible assets, you will also get it. Yes, Sriram, you're right. Yes, Meghna, yes. Yes, Akashnil, right. But do give examples like we have invoice, installation or construction completion certificate, legal title, sale deed, conveyance deed, original title deeds. You have to mention these. Look, Shriram, what you have written mortgage and against the entity. See, this is the difference. The points you are writing, they were in general. Now we have to supplement or complement these points by writing professional language. So the mortgage point which you have written, you have to write about the register of charges. You have to write about the charge form, charge created against the PPE. This is the professional and technical language for which you'll get good marks. If your point is okay, whether the entity has right over the PPE obligations, whether there are any assets being mortgaged by the entity against any loan, and the entity has obligation to settle the liability. This is a normal point. But you have to substantiate it with the audit language. Register of charges, the auditor has to check the PPE, right? Charge against the PPE. Okay. Presentation and disclosure again, as per Schedule 3, Part 1. Classify as land, buildings, plant and equipment, furniture, fixture, vehicles, office equipment, others. Assets which are under lease shall be separately specified under each class of asset. These are the classes of assets. These are the classes of assets: land, buildings, plant, equipment, furniture, fixture, right? And assets under lease shall be separately specified under each class of asset. A reconciliation of the gross value, net carrying amount of each class of the asset at the beginning and end of the reporting period, showing additions, disposals, acquisitions, all should be given in the form of a table. Other adjustments, depreciation. So disclosure, if anybody has written about this, or in short, yes, charge on asset is the keyword. In short, about the table of fixed assets, the opening value, the additions, the deletions, and the depreciation and the closing value, the gross as well as the WDV. I'll show you it's an extra in the next session. I'll show you it's an extra in the next session. How does an extra look like? Okay. Where sums have been written off on a reduction of capital or revaluation of assets. So here you get it, Siddharth, revaluation. Where sums have been added on revaluation of assets, every balance sheet subsequent to the date of such write-off or addition shall show the reduced or increased figures as applicable by way of a note, and also show the amount of reduction or increase as applicable together with the date thereof for the first 5 years subsequent to the date of such reduction or increase. Where the assets have been revalued for the first time or for the subsequent time, in the disclosures for the next 5 years, subsequent 5 years, you'll have to disclose it by the note. What is the amount of revaluation? By what value has the amount of the asset increased or reduced as a result of revaluation? So if anybody has written revaluation in disclosure parts, award yourself 1 mark. Yes, it is good. So for each class of property, plant, and equipment, whether the entity has disclosed a reconciliation of the gross and net carrying amounts at the beginning and end of the reporting period. So this is what you have to show. I'll show you it in the form of a table. For each class of property, plant, equipment, this is what it is, the value. So this is related to the depreciation. Opening accumulated depreciation for the year, account adjustments in depreciation on account of sale, and closing accumulated depreciation. And this is with respect to impairment losses. This is with respect to value. This is with respect to depreciation, and this is with respect to impairment losses. This says here amount of change due to revaluation. So if there is a change of more than 10% in the value of the asset as a result of revaluation, it has to be shown, disclosed separately in this table, otherwise by way of notes. So this is something which has been added this year as a part of disclosures. This is the latest amendment. You will find all the amendments which have been made a part of your syllabus and are recent amendments as per the company's law have been given in bold in your study mat. All the amendments which are of latest nature and very important from examination point of view. Okay, they have been given in bold in your study mat. I'll take it up. I'll show you in the next session. So the title deeds of immovable property not held in the name of the company. The company shall provide the details of all the immovable property other than properties where company has taken the property on lease. That is justified. That is a lease agreement. But where the title deeds are not held in the name of the company in format given as below, and where such immovable property is jointly held with others, these details are to be given. So PPE, investment, retired from activity, if you have disposed of, description of the property, its gross carrying value, title deeds held in the name of what? The director, company and director, 2 directors, 3 directors, officer of the company, means the property doesn't belong to the company but to the other person, could be director or jointly by company and another person. So yeah, here it is asking whether the title deed holder is a promoter, director, relative of promoter or director, or employee of promoter or director. Property held since which date? Reasons for bond not being held in the name of the company. If there is a dispute, also mention about a dispute. This is what the company has to give. This disclosure the company has to give. Right? And the auditor has to check this. Really important. Where the company has revalued its property, plant and equipment, we have done revaluation should be based on the valuation, Siddharth, by a registered valuer. The point you have written gets a mark over here. Under Rule 2 of the company's registered valuers and valuation rules 2017. Revaluation, you have to write all this. I hope I'm clear with this one. What is capital work in progress? For example, you are getting installed a machinery at your premises and it takes 1 to 2 months. You are getting a building constructed at your premises or a shed or a separate laboratory, whatever it be. If as on 31st March, it is still under installation or construction, it is known as capital work in progress. And details of capital work in progress should be given with aging schedule. Aging schedule means how much time has been taken and how much time is still left. So less than 1 year, 1 to 2 years, 2 to 3 years, if it is under construction for more than 3 years. Projects in progress, projects temporarily suspended. You have to give information with respect to both the categories. This is something which is being disclosed for the first time this year. It was not required till the last year. And the total of capital work in progress from this table should tally with the amount in the balance sheet. For capital work in progress whose completion is overdue or has exceeded its cost compared to its original plan, following CWIP, capital work in progress completion schedule shall be given. See, project 1, project 2, same. It says whatever time was planned for its completion, it has exceeded that time as well as the budget, the cost. A separate table for those particular projects. In case of capital, if somebody has mentioned details of capital work in progress to be given, yes, Cyril, likewise. Award yourselves 1 mark for the same. I hope fixed assets are clear. I hope it is clear. Intangible assets are all the procedures and everything are 80 to 85% are similar like fixed assets. Intangible assets. So what is your score? What is your score? So let me tell you which team has won. All of you, please share your scores. And if there is any doubt, please come up with it. Yes, Hiral, correct. Come on. What are your scores so that we could move to intangible assets and finish off this topic of non-current assets? Siddharth, 11 marks. Not out of how much, whatever marks you have scored. 1 mark, I told you. Award yourself 1, 1, 1. So I want to know your score. There is no maximum limit. Shriram. Meghna scores 6 marks. Siddharth scores 11. Hitesh scored 13. Good. Khushia 14. What about team B? Hiral 11. Oh my God, Khushi 28. Khushi, really 28? Can I believe you? Akashnil 3. It's fine, Sudhanshu. Actually, 10 is also good. Aradhana 10. Shriram 5. Khushi 28, seriously? What about others? Mostly members from team A have replied. What about team B? Mohammed, I was not a part of the game participant. Yes, Nilabjo. Yes, yes. You'll get a point mark for this. Come on, what is your score? Tell me. Prabhas, that was an activity. So you should not feel whether you did something great or not, but you participated and you got marks. We hadn't read on this topic, but still you are getting 7 marks. It is completely fine. And these markings are subjective because there was no criteria like I could check it upon. So somebody is getting 28, somebody is getting 10, 11. So whatever marks you are getting, it is completely fine and great. 7 is also good, Prabhas. Aitha 11. Prabhas, an idea to remember these points is the keywords. For example, I told you in the valuation part, depreciation, method of depreciation, impairment, revaluation. Just remember these keywords. You'll be able to recall all the points. Oh, good. Nilabjo 13. Kushi, I trust you. Okay. Okay, good, good. Very good. Very good. Siddharth, Sudhanshu, Kushia, Meghna, Hiral, Hitesh, Shaitha, Nilabjo, Prabhas, Aradhana, Kushi, Akashnil, Shriram. Akashnil, I think you are giving yourself very restrictive marking. So I cannot believe you are getting 3. I expect more. You also expect more. As far as your performance has been through the past sessions. So I suppose you are giving yourself a very strict marking. It's fine, Nilabdu. It was a team game as well. Along with the activity, I'm also making you realize the importance of time. That is why I gave you 1 minute. Time management is also very important for those 3 hours of the exam. We were targeting various aspects of writing in the exam in the form of an activity. So that is what there was a self-analysis. You could get to know on which part you need to work upon. Sometimes we really understand the question. We know what we have to answer, but we are not able to manage our time. And that is why we get low marks. Sometimes we don't know the answer, but we manage our time pretty well so that whatever we want to write, whatever we can gather based upon our knowledge, we could write it well. So it differs from examinee to examinee, and this was just an activity to make you analyze, self-analyze, where could you lack on, where you need to work upon apart from understanding and learning your syllabus. No, I thought that is completely fine. I thought that is completely fine. Even if you wrote in layman language, it is completely fine because now you will be writing in professional language. You have read the part with me. Now you will know how to convert the layman language into professional language, which will fetch you marks in audit. Layman language, which fetch you average marks. Professional and technical language with the use of audit keywords will fetch you good marks and separate, unique, and strong points. Shakti Villain got 4. Good. Right. Okay. Why did I ask you to give yourself 1 mark, 2 marks, 3 marks? Because I wanted to make you realize that if you're writing 3 points, but they all are giving the same meaning, you are getting only 1 mark. It is not the number or the quantity which matters, but the quality. So I asked you to give yourself 1 mark. I could easily tell you, just give me. I made you mark yourselves so that you could know what are the specific points, for what point are we going to get mark and for what point we are not going to get mark. So somebody told me, okay, Akashnil, fine. So Nilabjo, that the time management, Akashnil, about writing only 1 point. Aitha says I wrote simple points. So this is what you have to realize. Yes, Siddharth. Keywords, technical words, like you read professional judgment, professional skepticism, material misstatement, compliance procedures, audit procedures, documentation, substantive procedures. These are the audit keywords. Always make a note of it. Either keep with yourselves a diary or a pen, paper or something. Make a collection of audit keywords with you. When you're going for the audit exam, just go through it 20 minutes, 15 minutes, just go through it, that wherever you can use these words, reference to accounting standards, reference to standards on auditing, reference to Companies Act, reference to other acts. This is what give your answer a professional technical touch. So you all are telling me where you went wrong. The objective is achieved. You have realized yourself what the examiner expects of you. Yes, very good. Chale, intangible asset. What is an intangible asset? An identifiable non-monetary asset without physical substance, not existing physically, but in books only. Non-monetary means developed. What is non-monetary here? Held for use in the production or supply of goods or services, or giving on rent to others, or for administrative purposes. Goodwill, you all have read about goodwill in amalgamation. Internally generated goodwill, acquired goodwill, brand value, trademarks, which is fondly known as marka in layman language, computer software, patents, trademarks, design rights, copyrights, trade secrets, trade secret between the chemical formula used by PepsiCo and Coca-Cola, organizational knowledge, proprietary software code, brand and reputation, research and development, know-how. These are all the example of intangible assets. What is non-monetary? What is non-monetary? Let me see what you all have written. Okay. Okay, you cannot relate non-monetary written appropriately. You cannot relate it in money or measure precisely in terms of money. You carry out, you get its value. If mark the keeper or highlighter or write in book only, do we need to make notes? No, Kushia, it's completely fine. It completely depends upon whether you want to make separate notes or highlight in the book. Yeah, which is not cash or cash equivalent. Good. So why do we need to invest in these non-monetary assets? Enterprises frequently spend resources on the acquisition, development, acquisition to acquire from outside, development, internally, maintenance or enhancement of intangible assets such as scientific or technical knowledge, some formula, some innovation, design, implementation of new processes or systems, licenses, intellectual property, market knowledge, and trademarks, including brand names and publishing titles. Common examples are computer software, patents, copyrights, motion picture films, customer list, quotas, franchises, customer loyalty, everything. Like some of these are prevailing in our country, some relate to globally. Goodwill, it could be acquisite or arise on acquisition or maybe internally generated. You all know the difference between trademark, patent, copyright. Yes, Hiral, not for trading. Either fixed assets are not for trading purpose. Do you know the difference between trademark, patent, and copyright, everyone? Now, this is a point. As per AS 26 intangible assets, internally generated goodwill is not recognized as an asset because it is not an identifiable resource controlled by the enterprise. that can be measured reliably at loss. It doesn't carry any cost. You all have read about internally generated goodwill, the difference between assets and liabilities as per the market scenario. So it is not recognized as a very important point for your MCQ and correct incorrect. It is not recognized as an asset because we have not purchased it, can't identify it. It is hidden. So we cannot measure it reliably at cost. Intellectual property, Aradhana, is something which arises as a result of your intellect, like know-how, right? Intellectual property is know-how. You know about a formula, you know about a product, a process. That is intellectual property. Copyright with reference to books, with reference to scripts, with reference to movies, your songs, lyrics. Trademark is something which is your business's, like the logo specific to your business. Symbol, yes. Patents with respect to technical knowledge, some formulas, something you have innovated or invented. Patent is with respect to that. Good. Really good. Impressed. You all know about this. So the same thing which goes existence of intangible assets. It is an identifiable non-monetary asset without physical substance. So here, the first point which we did in existence, physical verification, fails over here. You cannot physically verify an intangible asset because it is without physical substance. So auditor, how can he verify the existence of intangible asset, whether it is in active use or not? He should verify whether such intangible asset is in active use in the production or supply or goods or services or given on rent to others or being used for administrative purposes like software. For example, for verifying the existence of software, the auditor should verify whether such software is in active use by the entity. So the auditor can verify the sale of related services, goods during the period under audit in which such software has been used. Some reports from the software, some documents from the software, reperformance using the software. For verifying the existence of design and drawings, the auditor should verify the production data related to establish if such products for which a design drawings are purchased are being produced and sold by the entity. Tea and Cookies Private Limited. We are going to prepare red velvet cake in different shapes and sizes. And we have purchased designs and drawings from a food designer. So I will check if they have purchased the designs and drawings from a food designer. So they'll definitely show it as an intangible asset. Now, whether the cookies and the cakes are being produced as per different designs and drawings for which they have paid, the auditor can definitely check. You'll not ask for tasting that cookie or cake, right? You'll just have to check the design or drawing. It is upon the auditee. Okay? Purchase for yourself and then check. In case an intangible asset is not in active use, deletion should have been recorded in the books, post approval by entities management. And what we did, depreciation for fixed asset, amortization for intangible asset should have ceased beyond the date of deletion. We did in profit and loss part, amortization is for intangible assets. Completeness, almost all the same point. Hitesh, fishing license, something which is like rights of fishing over a restricted area or license from government authorities, could be like that only. Yes, Nilabjo, right. Siddharth, had you been the quality auditor, right? Then you can check the taste of the cake. Or if you want to see, you are auditing the cost of the product. So you get a list of the materials which have been used in preparing that cake or cookie. Then you can definitely taste it to get a knowledge of the materials which could have been a part of it. So whether that material's cost is fake or actually that material has been included in the cake, then you can definitely taste it, right? Then that is your right. I knew this would be coming with that cake and cookies part. Verify the movement in the intangible asset schedule, opening, closing, deletions, asset wise. We've done this. Checking the arithmetical accuracy, amortization schedule. Okay, for all material additions, refer AS 26. In the case of fixed assets, physical assets, we referred AS 10. So AS 26 will give you marks over here. Shriram, see, royalty is something which is very typical, and a discounted model is used to value it. This is something which is a statistical model is used to value that. Okay. Ensure that no cost related to research or from the research phase of an internal project gets recognized as intangible asset. Research part, that is something which is before the generation of that asset. For an internal project, you have read it in your income tax as well, that no cost related to research will become a part of intangible asset. The R&D you did with respect to that asset, that will not be a part of the intangible asset, that will not be a part of the capital expenditure. Check the certificate or report or other similar documentation maintained by the entity with respect to intangible asset, like you started commercial production after receiving the designs, and if you have acquired goodwill, the business combination or the amalgamation agreement. Verify whether the additions and acquisitions have been approved properly by the entities and personnel, whether proper internal processes and procedures like inviting competitive quotations, etc., were followed. You can test the documents on a sample basis, right? We have read about it in fixed assets, physical assets. In relation to decision, the discard note, everything that we have done in previously. Value it properly as per accounting principles and practices. The same case, amortization in case of depreciation, right? Amortization method, impairment, AS 28, impairment losses properly booked for. The same case we did in depreciation part. Rights and obligations, the entity has valid legal ownership rights over the intangible assets. How can we check that? If purchased invoices, purchased contracts, documentation should be there with respect to legal holding ownership by the entity. Presentation and disclosure, classes like there was land, building, plant and machinery, furniture, fixture, others. Here we have by the names. Goodwill, brands, software, mining rights. You have read about mining rights in your accounts depreciation chapter. Publishing titles, copyright, recipe, formula, models. You know, food designers give their recipes. Food designers, the cake, tea and cookies private limited for cookies or for the cakes. You might have purchased a recipe rights. Designs and prototypes. Prototypes are artificial models. Prototypes means what would the asset look like? Yeah, what would the production result would look like? Licenses and franchisee, you pay a franchisee fee for acquiring a franchisee, others. Reconciliation of gross and net carrying amounts, the same thing we did over there. If something has been written off or revalued about it, disclosure about it. Then same for each class, opening balance, additions, disposal, impairment, other adjustments. Then the amortization schedule and the impairment. We did it in physical assets as well. The same thing running. For intangible assets under development, aging schedule, as we did in the case of capital work in progress, less than 1 year, 1 to 2 years, 2 to 3 years, more than 3 years, projects in progress, projects temporarily suspended. The total over here should tally with the amount of intangible assets under development head in the balance sheet. There is a separate head for this. For where development is under process, time has exceeded, cost has exceeded, again the same thing. A separate table for that. I hope it is clear. Siddharth, I write Pringles. Siddharth says that chips. I do like Pringles. Right? I find them better. So yes. This is enough for the day? Or you want to study more? I'm ready. If you want to study more, we can go ahead. Otherwise, enough for the day. Okay, we have another 5 to 10 minutes. Please come up with your doubts. The last examination, May 22. Question number 1. Enough. Question number 1. Part E. According to Caro, correct, incorrect? According to Caro 2020, the company auditor is required to state that whether the title deeds of all movable properties held in the name of the company are disclosed in its financial statements. Correct, incorrect? Khushi, yes, there are specific methods of amortization like depreciation. This is a question from your company audit part as well, and from this part as well. No, here it is just some disclosures. Audit procedures are the same. Some separate disclosures required by the management and to be checked by the auditor and stated in his audit report. Okay. Let's move to another question. Good. Agreed. CAR is the statutory auditor of QRS Limited. While performing testing of additions during the year, 4 marks question, he wants to verify that all PPE are in the name of the entity he is auditing. For all additions to land and building, in particular, the auditor desires to have concrete evidence about the ownership. The auditor wants to know whether the entity has valid legal ownership rights over the PPE, if it is kept as security for any borrowings. Advise the auditor procedure to be undertaken by him to establish the rights and obligations of the entity over the PPE. We read about all these points. We read about all these points. This is December's question. 4 marks. Here we are. Audit procedures establish rights and obligations of the entity over PPE. So in addition to undertaken for procedures verifying completeness, PPE purchase invoices should obtain copies of conveyance deed, sale deed. We read about these points. Verify original title deeds. If given as security for any borrowings, the original title deed should be a confirmation should be obtained from the respective lenders that they are holding the original title deeds of the immutable property as security. In addition, the auditor should also verify the register of charges available with the entity. See, I told you where you could get maximum points. That slide is the answer over here. 4 marks. He has given you 3 points and rights and obligations assertion. And here you get 4 marks. Now you got to know how to write the answer. This is a question from December 21 exam, 4 marks question. Coming to an attempt previous to this attempt, July 21. Three marks question. What does it say? The value of intangible assets may diminish due to effects of time, use, or obsolescence. The diminution of the value represents cost to the entity for earning revenue during a given period. Discuss the audit procedures to be applied by the auditor to ensure that intangible assets have been valued appropriately and as per generally accepted accounting policies and practices. 3 marks question. Answer to this question. The value, the same point. The entity has charged amortization methods. If there is any impairment as per AS 28, account for the impairment loss. 3 points. Amortization, method of amortization, impairment, revaluation, and you are sorted. This is a question from July 21. 3 marks. Yes. The main marks. Amortization, method of amortization, AS 28 revaluation. These are the main points you have to write. I hope, now you got to know how do you need to write in the exam. What are the important points? What language you have to write? How different your written points should be from each other. They should be supporting each other, but not giving the same meaning. To get good marks, your points should be different from each other and all giving a different perspective, complementing each other. Right? Anything else for the day, or we would wind up the session? For the next session, for the initial period, we'll be taking up the current assets and current liabilities. I'll be quick with them because the stage we have reached till now, it was quite detailed, and I took up everything in detail, each and every point, words, technical words. Now, what we are going to do in current assets and current liabilities, inventory, cash, debtors, creditors known as trade receivables and trade payables, and provisions and contingent liabilities. You will get a gist of what we have done till now in those cases as well. Okay? So we'll be moving quickly and we'll try that we get at least half an hour with us for a test in the next session for the whole chapter. Okay? We'll see as the time allows, be it an activity or an individual test for everyone, for individual scoring. We'll see as per time, but we will finish this chapter with a test, with your doubts and some performers which I want to show you, the disclosures and everything, how to disclose, how is it everything disclosed, right? With all those performers, some practice questions if time allows. Otherwise, I'll make a file of the practice questions with answers and I'll upload it for your practice. But we'll make sure that in the next session, at least we devote 15 to 20 minutes or half an hour for our final activity relating to this whole chapter. We will include everything, other sessions, topics also, either in the form of a test or in the form of an activity. We'll try to finish it off completely. Okay? Anything else for the day, please? Any queries? Yes, Prabhas, I would. Just give me some time. If it is possible by the next session, by Friday, I'll upload it. Otherwise, I'll definitely prepare it by the weekend and I'll upload it by Sunday. I'll try to upload it by the next session, but in case if I'm not able to, because it requires some time and high precision, if I'm able to make it, I'll definitely. Otherwise, keep looking over to the note session. By Sunday or Monday, I'll definitely upload it for you people. For the whole chapter 9, how to make chapter charts. Okay, Siddharth, I'll take care of it. Siddharth, somebody asked me for the difference between TCWG, those charged with governance and the management. And this part, if you could remind me in the next session, I will definitely take up. The key important point, Siddharth, I'll try to make it a point in the chapter chart. Right? I'll try to make it a point in the chapter chart, the key important points. Okay? Sudhanshu, patent is something which is, it could be a formula, right? It could be some invention. Know-how is your knowledge. Human knowledge about a process, about a product or a service, anything. Know-how is that. Okay, people, anything else? Or should we wind up? Wishing you a good night. And let's hope that we end this chapter in the next session. The journey of chapter 9, the journey of financial statements, on a productive note in the next session. Take care, everyone. Good night. Goodbye. Vinuji?